Good morning, everybody. It's Monday, February 24th, 5:24 a.m. Central Time. Grain markets are lower this morning. I'm going to stick with the March quotes today. We will roll to May tomorrow. March corn futures down 5.25 at 486. March soybeans down 5.5 at 1034. March Chicago wheat down 9.75 at 580.25. March Kansas City wheat down 10 at 599.25. March spring wheat down 10.25 at 621.5. Mackenzie, we are approaching 20,000 subscribers on YouTube. I don't really have any goals in mind, but it'd be cool to get there. So if you guys
definitely.
if you guys haven't hit the subscribe button, it's free to do, of course. Just subscribe to the YouTube channel. You'll be alerted whenever our stuff comes out. Anyways, do us a favor, hit subscribe. Let's jump to the first story.
CME Group corn futures have corrected lower. The nearby March 25 contract traded as high as 504 last week prior to trading below 490 overnight. Some might argue that the market was overdue for a correction given a strong multi-month rally. Most of Argentina's corn country will see rainfall during the next week. A wetter forecast on Friday could have spurred some selling pressure in the row crop markets. In addition, traders are beginning to discuss the idea of drastically increased U.S. corn acreage ahead of USDA's Ag Outlook Forum data that will be released later this week.
Let's do acreage, and then we'll get to South America and the forecast in the next story. The corn-soybean ratio would certainly indicate that, based on history, you will see additional U.S. corn acres in the United States versus last year. I think the ratio is just one thing. It's not the most important thing. Here's the most important thing. You consider corn, and then you consider the crops that it competes with for acreage. What does corn compete with for acreage in the United States? Soybeans would be the big one. Soybeans don't make any money. They're big losers on the farm for the vast majority of row crop operations. That's your big one. Spring wheat, not great. Cotton, absolutely terrible. There's not really much competition out there. So, I mean, I don't know what the corn acreage number is going to say, but if you're working with like a muted acreage expansion, like you think corn acreage is only going to be 93, I'm not saying you're wrong. I'm just saying, like, which of those crops is going to hold on to the acres, because none of the competing crops really make much money at all. It's really a tricky situation. This is the only ad I'm going to do today. I did a video last week regarding U.S. soybean acreage loss and the balance sheet implications, and I'm going to do the same thing for corn today because the soybean video was so popular. People wanted me to do corn also. So if you guys have an interest in the acreage situation and you're kind of curious how these new crop balance sheets may look, and these are just my ideas, early ideas, but you got to start somewhere. Check out the premium subscription. We're also doing a grain marketing for beginners video series. I had the three recent ones that we did in the email this morning: futures versus HTAs. Also, we had put options for beginners and re-ownership for beginners. There's going to be a couple more that come out here over the next couple of months. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's $50 a month. You can cancel at any time. No other fee, no other obligation. Nobody tries to sell you anything else. We just want to send you a whole bunch of information for $50 a month, and that's it. Give that deal a shot this morning, guys. Only ad today, I promise.
The pace of the Brazilian soybean harvest closely mirrors that of last season. According to Patrio Agronegocios, Brazilian farmers have harvested 37.6% of the crop, slightly less than the 38% harvested at the same time last season. The USDA estimates the crop at 169 million metric tons, while Brazil's agency Conab forecasts the crop at 166. Brazilian soybean country is expected to be drier than normal during the next 2 weeks as harvest pushes forward. Brazil's second corn areas will see normal seasonal rainfall.
Here's a good map from our friends at Crop Profit. So you see that some areas of Brazil are going to be dry, and very dry at that, relative to normal over the next 14 days. However, your second corn areas, which are more kind of in Mato Grosso to the north, they're going to be a little bit better off. So when you break it down, this is the Crop Profit data based on the Euro model. Brazil's second corn country will see 81% of normal rainfall over the next 2 weeks. That's not bad. It's enough. The soybean crop's only going to see 71% of its normal rainfall, but you got to remember, soybean harvest is ongoing. So I don't know that dry weather is a huge concern right now, maybe in the south. Argentina is going to be, it looks to be, incredibly wet over the next 2 weeks. Argentina soybean country expected to see 252% of its normal rainfall. Similar statistic for corn, just a ton of rain across corn and soybean country in Argentina. And this is timely. It's very timely. I wonder if almost, I'm not going to say it's too much because I know they started off dry, but that's a lot of rain that they're going to see if this Euro model is correct. This rain is going to be pretty persistent over the next 10 days. You're going to see quite a bit over the next 5 and then more in the 5 to 10. So the models are going to shift around a little bit, but I do think that this forecast, which shifted wetter on Friday, it absolutely has something to do with the weakness in the corn market and also in the soybean market on Friday and into this morning.
The funds increased their net long position in the corn and wheat markets last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, February 18th, large money managers were net buyers of 33,000 corn contracts. The net long of 360,000 contracts is the second largest since April 2022. The funds were net sellers of 9,000 soybean contracts and net buyers of 26,000 contracts of SRW wheat on the week. The net short of 48,000 SRW wheat contracts is the smallest since November 2024.
Yeah, that's been a little bit of a short covering event in wheat. They've still got some more to go if they want to get, flat or build a long position. Funds probably liquidated some corn on Friday, probably liquidated some soybeans on Friday, but they're still holding net long positions. This net long of 360,000 as of last Tuesday, and maybe it's in real time, maybe it's 340. I don't know. That's still very, very substantial. We've talked a lot about farmer ownership. We believe, not we, but me, and the last time Matt Bennett was on, we talked about this. Farmer ownership of old crop corn bushels nationally, maybe it's 20%, maybe it's 15% of last year's crop. It's pretty light relative to what we'd see normally. And I think that has to do with a number of factors. Cash flow is an issue. High interest rates are an issue. Storage costs are an issue. I think there's just kind of a cash crunch going on. I think there were a lot of concerns about tariffs. So, yeah, the farmer's a little bit lighter holder of old crop bushels maybe than he normally would be. And that has enabled the funds to bid up this market a little bit.
U.S. corn export sales declined last week, but remained strong. Net corn sales were reported at 67 million bushels. The print was down 12% compared to the previous week and 5% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales were near the upper end of pre-report expectations at 18 million bushels. The print was up significantly from the previous week, but down 23% from the prior 4-week average. China was the largest soybean buyer for the week. Net wheat sales were reported at 20 million bushels. The print was down 7% from the previous week, but up 31% from the prior 4-week average. Mexico was the largest wheat buyer for the week.
These are pretty solid sales across the board. Even soybeans, when you look at soybeans, okay, we're down 23% from the 4-week average, but we're supposed to see a seasonal decline here. So that's perfectly normal stuff. Corn export sales, total commitments are up almost 30% compared to the same period last year. Second best book of sales of the last 10 years. USDA has projected that U.S. corn exports will only increase by 7% this year. So there is still a narrative out there, and I'm on board with this, that USDA is too low with its export number. I know we've talked about front loading, but guys, it's almost March, and the export sales are still fantastic. Soybeans were just kind of average-ish relative to the last 10 years. Wheat sales were actually strong last week. That's a good wheat print, and I think you could make the same argument in wheat that I would make in corn. The USDA may be a little light with its export projection. So I don't have anything bad to say about those export sales numbers at all.
The stock market tumbled on Friday amid concerns of a slowing economy and persistent inflation. The Dow Jones and S&P 500 fell by 1.7%, while the Nasdaq declined by 2.2%. The losses were triggered by a string of disappointing economic data. One report suggested that U.S. business activity is slowing to a 17-month low, while another indicated that consumers expect inflation to rise. Consumers are becoming increasingly concerned about the impact of government policies such as spending cuts and tariffs. There are also concerns about growing geopolitical tensions.
Whether you love Trump, hate Trump, you're indifferent. I don't know if anybody's indifferent, but in any case, you got to admit that the market, at least in my view, has been pretty it's lacked volatility since Trump has been inaugurated, which to me is surprising. I mean, he says something every day about whether it's tariffs or policy or whatever, and we haven't really seen a great amount of volatility in the stock market or other markets, which I think is contrary to what a lot of people had thought prior to the inauguration. They thought, oh my gosh, he's going to get in, he's going to start swinging hammers and, tariffs and policy. And it hasn't been that volatile. Maybe we're buckling up for something like that. But so far, I mean, we're still up 2.5% year to date in the S&P. It still looks like a strong uptrend. You could correct a lot. The correction could get nasty. And at some point, you're going to see another 15 to 20% correction at some point in time. I don't know when that is, but still looks like a bull market to me.
We had a cattle on feed report come out on Friday. Cattle on feed as of February 1st were reported at 11.7 million head, marginally lower than pre-report estimates, but down 1% compared to last year. January placements were reported at 102% of last year's levels, falling nearly 2% below expectations, but 2% higher than last year. It's important to remember, despite the year-over-year increase, placements last month were down 6.2% compared to the 5-year average. Marketings in January came in at 101% compared to last year, which was about 1% short of expectations and also down 1% versus last year. The report will likely be viewed as neutral to slightly bullish, as both on feed totals and placements came in lower than anticipated.
So the trade was within 1.7% on the placements. That's about as close as they ever get. So I would say that this is, it's neutral, maybe a little bit friendly. Looking at some cattle charts, the live cattle chart, if you really peel it back and look at a weekly chart, this is still a bull market. Corrections and volatility within this bull trend have obviously been plentiful. We've seen a lot of that, and maybe we're in the midst of one of those corrections right now. I'm not ready to say it's over yet. Feeder cattle looks very similar. We're kind of at the midpoint of what's been a multi-year trend channel. So it technically still looks good to me, big picture. What did cattle do on Friday?
Live cattle were 15 cents to 60 cents higher. Feeders were 85 cents to $1.35 higher. Cash cattle trade was incredibly light last week and lower. In the southern plains, cattle were $4 lower compared to the previous week at $1.99. Up here in Nebraska, cattle were $3 to $3.50 lower at $1.99.50 to $2. Notably, cash cattle trade across all regions is about $10 off from the all-time highs that we saw back in January.
Friday is first notice day for March grain futures. If you have any positions there, basis contracts, whatever, make sure you take a look. Outside markets, U.S. dollars about flat. Stocks are up. The S&P's up 34 points. The Dow's up 330, so trying to claw its way back after Friday's correction. Bonds are off a little bit. Crude oil is up 10 cents in the April WTI at 70.50. Have a great day, guys. We'll be back on Tuesday.